Disclaimer: the content of this video is for personal experience and opinion sharing only. It does not constitute an offer, invitation, recommendation, or solicitation to take any action based on this information. Investing involves risks. Please evaluate carefully and bear the responsibility for your own profit and loss. One day, one Master Huang, keep your investment path straight. Hello, dear viewers. I am Master Huang. Today is Monday, May 11, 2026. It's another beautiful day. Today's topic: has Intel caught up with TSMC? This is an important episode, so be sure to watch until the end. Let's look at the key information first. The latest U.S. non-farm payroll employment increased by 115,000. This data is higher than market expectations. Some investors are gripped by the fear that the Federal Reserve will tighten liquidity again. However, key data from the report shows that the unemployment rate remained flat at 4.3%, and the average hourly earnings growth rate actually slowed to 0.2%. This golden code of a strong job market combined with falling wage inflation is like a perfectly balanced latte. The consumption power generated by labor force expansion has not triggered a wage price spiral, which may successfully soothe the market and allow capital to play more freely in risk assets. Over the past 2 weeks, we have entered the peak of the U.S. stock earnings season. Tech and large-cap stocks remain the center of attention. Driven by tech giants like Apple consolidating their chip supply chains, defensive utility sectors have been left behind. This massive rotation of sector funds shows that the public is betting heavily on tech hardware sectors that possess real profit momentum. Regarding the Middle East conflict, latest reports indicate that Trump was furious over the Hormuz Strait sovereignty proposal presented by Iran, calling it unacceptable. We see that current crude oil prices have jumped over 3%. Since the conflict escalated in late February, both sides have been playing a strategy of fighting while talking. However, it seems the bottom lines of both sides are still far apart, and we must wait until one side can no longer hold out or until the situation becomes clearer. Master Huang has shared in previous videos whether Iran's oil infrastructure is facing operational difficulties under U.S. maritime blockades. There are even rumors of oil spills off Karg Island in Iran. The key point to watch here is whether Iran's oil storage facilities are becoming insufficient, and if Iran is intentionally leaking oil, we must be especially vigilant about environmental pollution. Of course, this news might reveal that Iran's pressure is increasing daily. Oil prices have moved back above all moving averages, but Wall Street seems to have a big heart. Under the cover of strong macroeconomic data, the market has chosen to ignore the geopolitical war of words over the past few weeks. Master Huang has reminded you many times. News is one thing, but market reaction is more important. A special thank you to Mei for your sponsorship. With everyone's support, Master Huang can keep going for a long time. Let's look at viewer comments. A viewer said, "My God, I'm so regretful I didn't join the member channel earlier. Thank you, Master Huang, for your selfless sharing. Seeing viewers profiting on their own makes me happy for everyone." I also remind Dolphin level and above members to watch last weekend's highlight video, 2026, The Crisis and Turning Point for Taiwanese, The Turning Point, and stay tuned. Let's look at the 3 major U.S. indices. The Dow Jones Industrial Average attempted an upward push during the session, but failed to hold, closing with an upper shadow. However, overall, it remains above all moving averages. As for the strong tech stock Nasdaq, it continued to rise by 1.71% to over 26,200 points. Crucially, it closed with an almost full-body red candlestick last Friday. The performance of tech stocks explains that AI infrastructure development continues to boom. Regarding the Philadelphia Semiconductor Index, which is more closely linked to the Taiwan stock market, it was spurred by Micron Technology's surge of over 15%. The index rose by over 600 points last Friday, an increase of 5.51%. However, in this situation, the divergence between the short, medium, and long-term moving averages is becoming larger based on technical analysis principles. Keep an eye on the risks of excessive divergence. With the help of AI, this year can be called a chip stock party. This chart shows Intel's stock price like a giant beast waking from a 26-year slumber, breaking through historical highs. This frenzy stems from AI's expanding appetite. Demand is spreading from GPUs to traditional CPUs and memory. Intel is also a topic for today, which I will continue to share later. This chart shows the frenzy in the US tech sector. SanDisk surged 558%. The S&P 500 semiconductor firms saw their market value soar by 3.8 trillion USD in just 6 weeks. A stock price surge can easily make people think of a bubble, but there may be a great discrepancy here. Prices have gone to the moon, but valuations might only be at the halfway point. The reason is that profit growth is outpacing stock price growth. Reports cite Micron as an example. While its stock price soared 770%, its estimated revenue grew from 15.5 billion in 2023 to 107 billion USD, with operating profit hitting 77 billion. This estimate puts Micron's forward P/E ratio for the next 12 months at less than 10 times, far lower than the broader market's 23 times. Having real profit support is perhaps the biggest difference from the internet bubble of the past, which lacked earnings. Regardless, the AI feast continues, but a dangerous phrase in the market is always, "This time is different." Therefore, while enjoying the market trend, dear friends, you must remain rational. Next, the important 10-year Treasury yield, which remains at 4.38%. Master Huang shared a long time ago that with the pressure for the Fed to cut rates from above and U.S. economic support from below, it is easy to maintain range-bound consolidation. As for the Taiwan dollar exchange rate and the U.S. dollar index, the U.S.-Iran negotiations seem to be at a stalemate, causing oil prices to jump again. We see the U.S. dollar index rising, but the magnitude is not very large. Looking at the trend, it remains relatively weak. Keep a short-term eye on the Middle East situation and the Federal Reserve's interest rate policy. This is the U.S. benchmark interest rate chart. The market is waiting for the interest rate cut bus, but those standing at the bus stop might be disappointed because this bus seems to be delayed indefinitely as inflation and other variables dominate. Therefore, some institutions expect interest rates to remain frozen at 3.5% to 3.75% for a long time. The market has also seen an interesting shift. This chart reveals the psychological war of capital. Last year, everyone was dreaming of rate cuts, keeping 26-week and 52-week Treasury bill yields safely below the benchmark rate. Now, the dream seems to have ended. Short-term yields have skyrocketed and even started to reverse, indicating the market may be giving up the weight and starting to reprice. Some investors even think, instead of shivering in the cold waiting, why not go inside and have a cup of hot tea? Capital is shifting. As of May 6, money market funds saw a surge of 122.35 billion USD. While everyone was staring at the interest rate cut schedule, those who embraced short-term assets early and locked in a nearly 3.7% yield have become comfortable players in this waiting game. Therefore, the key remains appropriate asset allocation. Next, looking at the Taiwan stock market, it opened slightly flat and fluctuated, followed by buying interest that pushed it up. The index is now up over 200 points. However, we see that the futures, which were originally a leading indicator, showed a positive basis of 1,000 points in the overnight session some time ago. That basis is now narrowing. Looking at the daily K-line chart, it currently shows a full red candle with a lower shadow. This suggests that in a gradually rising trend, such an opening and subsequent buying indicates that the bullish intention is still relatively strong. From a purely technical perspective, this remains a strong bullish continuation pattern. Standing from a longer-term perspective, it is a bullish structure above all moving averages. The characteristic of a bull market is usually short-term moving averages driving long-term ones, with the long-term averages protecting the short-term ones. As for the volume and price, I have mentioned recently that it shows a relatively normal pattern of price-volume growth and price-volume shrinkage. I have also mentioned that if price-volume divergence occurs, meaning prices rise while volume shrinks, or prices fall while volume grows, it is usually a precursor to a trend reversal, but in terms of pure volume-price relations, there is no sign of this yet. Next is the hot stock sector. The stock with the highest trading volume is the panel maker Innolux. We saw foreign institutional investors buying back at the end of April, and with their help, the stock may challenge previous highs. Of course, volume remains the key. Aoyu Optronics has returned to its monthly line, but unlike Innolux, foreign investors are still mostly on the selling side. Another bright spot in the market today is the U.S. memory chip indicator, Micron Technology. Especially after a series of performances, it surged over 15% last Friday. Spurred by this, Taiwan-related memory stocks, such as Powerchip Semiconductor, which returned to its quarterly line, and Win Bond, which hit the daily limit, saw foreign institutional investors return to the market in April. As for UMC, it hit a historical high last weekend. However, be careful, institutional investors have shifted from net buying to net selling. Next is the Taiwan dollar exchange rate, which is the most critical factor affecting Taiwan's stock market. Taiwan stocks have been surging all the way. Some time ago, there was a sudden sell-off during the session, but as Master Huang mentioned, if foreign investors were determined to take profits, we would usually see the Taiwan dollar devalue significantly. However, we have recently seen the Taiwan dollar appreciate. The key points to watch remain: 1. Foreign institutional buying and selling in Taiwan spot markets. 2. Whether the Taiwan dollar continues to appreciate, as appreciation usually represents capital inflows. 3. Whether foreign short positions in futures are decreasing. Also, watch for technical signs of explosive black candle engulfment. We will keep a close eye on the outlook. Do you want to improve your investment skills? Remember to subscribe to Master Huang's channel so you don't get lost and can find me. Alright, let's discuss today's topic. Has Intel caught up with TSMC? Intel's stock price has shown strong momentum recently with clear performance. Trump even posted Intel's stock chart on his Truth social platform, claiming that after the US government invested in Intel, it had an unrealized gain of about $45 billion in 8 months. Seeing Apple talk to Intel and Samsung about foundry services makes it look like TSMC is losing orders. But looking at the numbers, it's not that pessimistic. TSMC's revenue for the first 4 months of 2026 hit 1.5448 trillion NTD, up 29.9% year-over-year. March and April both exceeded 400 billion. If Apple really pulled the plug, the revenue trend would show volatility, but there are no such signs yet. The key is that in the first quarter, TSMC's 7 nanometers and smaller advanced processes accounted for 74% of wafer revenue. HPC now accounts for 61% of total revenue, clearly surpassing mobile's 26%. This means TSMC is like a high-speed rail during peak hours. Apple is still a big client, but AI servers, GPUs, ASICs, and HBM logic chips are all fighting for space. The train might be so crowded even standing room is precious. Therefore, Master Huang interprets TSMC's core short-term focus to be on high-end production capacity and advanced packaging. According to accessible data, it remains in a state of supply shortages. Foreign reports note that 2 nanometers capacity is expected to have a compound annual growth rate of 70% from 2026 to 2028, and CoWoS capacity from 2022 to 2027 is expected to grow by an average of over 80% annually. TSMC is doing its best to expand, which shows that customers are queuing up, not just for the sake of it. The key is TSMC's expansion speed. Can it feed this AI beast? Aside from software, we must also look at AI hardware. Let's look at what NVIDIA CEO Jensen Huang said about the trend of AI development. This chart is very clear. Within 1 year, physical AI will land with autonomous vehicle sensors. In 1 to 3 years, it will evolve into robots that can reason. 3 years later, Jensen Huang believes it will become fully popularized, penetrating factories, logistics, and households. In plain English, AI is moving from the cloud to the real world, and its final destination is inseparable from robots, automation, and edge computing. Long-term viewers know Master Huang has shared this for a long time. After looking at electronics, let's continue with Taiwan's financial industry. In the first quarter, the global financial market felt like it had stepped on the accelerator. The Financial Supervisory Commission announced that the overall profit of the 3 major financial sectors reached 371 billion NTD, an increase of about 100 billion compared to the same period last year, a growth rate of 37.09%. On the surface, everyone is looking at the securities and futures sector, with a profit surge of 164.14%, reaching 67.57 billion NTD. With the stock market doing well, brokerages are performing strongly. However, looking past this excitement, the details worth investigating lie in the banking sector. Domestic banks' first quarter profit reached 174.28 billion NTD, a year-over-year increase of 20.5%, hitting a historical high for the period. The reasons are interest, handling fees, and investment income. All 3 engines are firing at once, like a player who just ate a superstar in a game. However, operating a business is not the same. Foreign banks' profits fell slightly to 6.98 billion NTD, while mainland invested banks plummeted from 13.5 billion to just 3.5 billion NTD. The cause behind this is worth noting, as noted by financial websites like Bloomberg, who often discuss the constraints of the macroeconomic environment. The decline in mainland invested banks is primarily due to the impact of the People's Bank of China's rate cuts, leading to a significant shrinkage in net interest income. Foreign banks are being dragged down by bad debt provisions. This report card tells everyone, when the market is throwing a party, don't just notice who is dancing. The highest domestic banks, relying on diverse revenue streams, have successfully resisted interest rate volatility in a single market. In a wave of capital, if the foundation is stable enough, companies that can walk on multiple legs tend to possess greater resilience. Looking at the overall market chip situation, foreign investors shifted from buying to selling last Friday. As for domestic investment trusts, they remain under government-directed funds and support from retail capital, favoring Taiwan stocks since February of this year. As for margin trading, the market pulled back over 300 points last Friday, and margin trading balances also fell by about 5.4 billion NTD. However, the overall margin balance remains as high as 477.1 billion NTD next. A very important leading indicator. Trading volume has consistently broken through the $1 trillion mark. I believe the government is collecting a fortune in securities transaction taxes. Of course, Master Huang also hopes that, while tax revenue increases, the government will take more care of vulnerable groups. Next, we focus on the very important foreign futures short positions. Foreign investors were buying while building short positions last week, and on Friday they sold off some holdings and increased their short positions to a relatively high level of 54,000 contracts. As for major traders in the market, long positions also decreased to about 4,000 contracts, and even the top 10 traders shifted from net long to net short. Also important is that foreign investor option long position amounts decreased from 120 million to 60 million NTD. Moving from a hedging mindset, they added short positions ahead of the monthly futures and options settlement day next Friday. May 20, of course, there are still a few trading days until the actual settlement. Keep a close eye on the changes in short positions during this period. If short positions continue to increase, be extra careful. Could this be a sign that foreign investors are planning something? You can compare this to past settlement days. If foreign investors hold a relatively high proportion of short positions before the settlement day, is it more likely to cause greater volatility on that day? Especially since foreign investors still hold a large portion of blue-chip stock chips. For example, after TSMC hit a historical high of 23.45, after 23.45, foreign investors seem to still be taking profits. As for the retail index, long positions decreased, currently remaining at 9.33%. The above is for market information sharing only and not an investment or trading analysis recommendation. Alright. Let's look at major US blue chip stocks. After TSMC ADR surged on Wednesday, it saw 2 consecutive days of slight profit taking. Of course, from a longer-term perspective, TSMC's medium and long-term moving averages are in a continuous upward state. Microsoft still has not stood firm on the 20-week moving average. Apple has successfully challenged historical highs. Regarding Apple's pricing strategy, I mentioned it earlier, right? Keep an eye on whether Apple is using this to gain more market share. Google is also at the edge of a new high in the US market. A stock with a relatively strong upward trend is Micron Technology. After continuous performance, we can see the stock price surging with an increase of over 15% last Friday. Not only that, in the current overnight session, Micron continued to soar by over 7%. As for the electric vehicle giant Tesla, it surged over 4% last Friday. Benchmark stock Nvidia is again approaching a historical high. Thus, we can see that the tech stock frenzy continues. Manufacturing PMIs in both the US and Taiwan for April remain in expansion. For example, the US ISM index continues to rise, supported by AI and other tech demands. Taiwan's exports in April reached 67.62 billion USD, up 39% year-over-year, hitting the second highest level in history, which directly explains that the AI demand and spillover effects continue to ferment. Under the current bullish inertia, blindly trying to call the top or bottom will only increase unnecessary transaction costs. Compared to predicting reversals, focusing on following the trend is more characteristic of a winner. When the market shows signs of weakness, such as trendline breaks, major investors selling, or fundamental growth slowing, only then should you act decisively. If the overall structure remains intact, let your profits run with the trend, respect market forces, and sail with the wind. Wishing everyone smooth operations and bountiful profits. Master Huang encourages everyone. Wealth always belongs to positive, optimistic, and patient Huang fans. Wishing you smooth operations.